Hi and welcome to this week's Market View. Once again, after a brief holiday, Bill is back and joined by him, the Chief Economist at Markets.com. Bill, since you've been away, not much has happened. We've all been asleep here in the office. In all seriousness, it looks like the world has changed again, or at least, I suppose, consistent, but changed back to Obama. So he's the new president. We saw the markets rally.
He's the continuing president.
Continuing president. Markets rallied a little bit on the back of that, and then suddenly, literally, news of the fiscal cliff. They fell off a cliff. What's your take on the whole fiscal cliff thing? Do you think that investors are getting, over worried?
Yeah, I think they are, because I mean, Angus, we're in a market now where 5 years ago the market was only going to get better. We were all going to become multi-billionaires, and the sun was never going to stop shining. Now it's a question of well, my doom and gloom is better than or worse than your doom and gloom, and I think that's what it was. I think the interesting thing, and I do know, that I think the New York Times over this past weekend, what was Superstorm Sandy, or Sandy as we'd say in the States, that I think a lead article was like, God must be a Democrat. Because there are a lot of people feeling that with even Chris Christie, who was the governor of the state of New Jersey, who was the main speaker as the Republican, even said complimentary words. And then, of course, Mayor Mike Bloomberg supported Obama. But I think, and maybe, hopefully, I'm not being too altruistic, but I think the speech that Mr. Obama gave, and also the speech that Governor Romney gave, and especially with President Obama almost hinting that he wants to sit down with Governor Romney. And my feeling being, and there was an excellent article in the Daily Telegraph today, talking about how the Republicans have totally missed the shift in the political background in the U.S. And if they don't pick it up on Latinos, African Americans, the 18 to 25.
So maybe you're saying hopefully there's going to be consensus. The problem is, we've seen in his first term, with the debt ceiling and things like that, there simply was just, never any agreement, there were loggerheads, and the worry is, of course, that the same's going to happen this time. And, we're going to get all these austerity measures implemented. We'll see the US go back into recession. But you're a bit more positive.
Yeah, I'm a bit more positive. If nothing else, at least the Speaker of the House, albeit he doesn't become the Speaker of the House again until in January when everybody's re-elected and sits down, he's already made two comments in the US saying that we will be willing to sit down and work with the President. He didn't say he would agree or this, that, and the other, but at least the simple fact that he made the comment that we're willing to work. And I think even Governor Romney said it's time for us to cross over the aisles, shake hands, and work for the U.S. and work for the globe rather than working for me as a domestic politician.
That sounds interesting.
And again, we're going to have push and shove it and this, that, and the other. But also, from a monetary standpoint, the Treasury can defer the fiscal cliff. Okay, so I don't come the 31st of December if all the
world will end.
Yes, the world won't end.
Yeah. Well, that's very interesting. So you're a bit more optimistic.
Yes.
And certainly the markets would suggest a big move down. So that's always good. So let's focus on this side of the Atlantic now.
Yes.
And obviously that negativity really was kicked off by some revisions downwards by the European Commission of GDP across the Eurozone. And that kicked things off. But today we've had ECB. Where do we stand with the Eurozone? Because obviously Greece have just passed that austerity package once again. And I was on radio this morning and there was a Greek head of their business consortium, and he was very optimistic, saying that this would be the last austerity package, we've reached the bottom, we can move higher from here. Are you as optimistic as him?
Yeah, I think so. I think you've got to be. And I think one of the things that, again, going back to the States, the Democrats listen to the 18 to 25s, okay? I was in Belgium and I was in France in the last week, okay? The previous week I was in Amsterdam. And I can't tell you how many 18 to 30-year-olds I was talking who were angry, who were upset, saying that the European Union, etc., had let the team down. Well, they are the future, okay? And we have to feel this way in Greece, okay? Because the simple fact, if it doesn't happen, whether you want to call it the Greeks or whatever, but we have to appeal to the next generations. And this is one of the things where the politicians, have to look ahead. And I mean, in the next group, rather than what am I going to do myself? And so therefore, I do feel that, again, whether Greece stays in the European Union or not, there is the process is being started to appease the next generation, which is mandatory.
And then just on the final subject, I suppose, today we had a good Spanish bond auction.
Yes.
So that's always encouraging, I suppose, for Spain, but not so much for the bulls and not so much for risk appetite, because of course we saw the euro sell off as a result, and we saw equities just come back a bit, because it means, probably unlikely to see any bailout this year. I mean, are we still going to get a bailout?
I think one of the things we've got to look at is, I think on the 25th of this month, Catalonia, which is Barcelona, they have their local elections. But maybe you don't want to talk to me. I was a member of that distinct minority. It would not have surprised me at all to see the ECB cut rates today, because of Draghi's comments earlier in the week, basically saying that the OMT, we're not going to start it as soon as everybody expected. For the simple fact is, we've seen more than a 200 basis point drop in both Spanish and Italian yields. And it was also talking about Germany. As we saw in the last week or 10 days, German PMIs, consumer sentiment, even today, German exports dropped 2.5%. And now the European Union, as you just mentioned, has dropped Germany's GDP for next year from 1.7 to 0.8. So it would not have surprised me. Therefore, I think maybe he's pushing it back, but I am expecting to see at least another 25 basis point rate cut by the European Central Bank. I was hoping today. We may have to wait till December, but
so either next month or certainly in the new year.
Yeah, definitely. I mean, there has to be another 25 basis point, because the OMT does not have enough money to bail Spain out. And I mean, I think there was even in the paper today talking about Spain may start selling, articles in the palace and this, that, and the other to try to make some money. But I mean, it's a situation right now. Spain will probably come for the bailout in the new year. That will help the bond yields. Also, the simple fact is, as we saw with the sell-off yesterday in the States, big move in bonds. The German 2-year traded again for the second time since July at a minus number, okay? And this to me is showing short-term people are still, they want the return of their capital rather than return on. So I mean, I think that we got a lot to look at. And even Draghi said we're not concerned about inflation. So I could see, again, probably another 25 basis points. I think as we'll see today when we get the minutes and the inflation, I think for the second time in 6 months, I think Sir Mervyn was on the wrong end of the vote. I think it could have been 6.372. We could see some more quantitative easing, but ECB, I see another rate cut. I think the Bank of England will hold, and I do feel we'll start seeing politicians in the States talking for the states rather than for their party.
Well, that's certainly a good note to end on. Thanks very much indeed, Bill, as ever. Good to see you.